Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. I've been out for the past week or so, I'm sorry for not being available, but things have to happen. We had a big conference in Boca, which went really well. It was great to meet a lot of you from Redler All Access and also from the VTF and those who are looking to get more information from T3. And also, my son was off from school, so got to see the parents and make a vacation out of a trip. So with all that said, I am back, and we will be back on our consistent schedule with the morning call and the recap the way we've been doing it. So anyway, today we came in, the futures are down, and the question was, could we fill yesterday's gap? Right? I went over every single pivot from most sectors to figure out, can we get below yesterday's low and stay below it for some kind of gap fill, and is there a trade there short? And whether or not it really fills the gap, and stays weak, or we see some kind of setup like you saw with Friday's gap fill into yesterday's gap up. So anyway, let's just take a quick look at the chart of the spiders. You go to the chart. Let's fast forward to first of all, look at this double bottom right here. Okay, you had a double bottom, reclaimed the 8 and 21 day, took out resistance, and then this was last year's counter trend rally that even if you missed this red dog reversal here, you were able to get involved here, or when it paused that resistance, held the 8 day and went another 100 points. So we've been looking over here to figure out, is this similar? How could you maneuver it? How can it be traded? Will there be continuation? Most are saying we need to go higher before we go lower, or lower before we go higher, blah, blah, blah. Well, here was your low, and here was your double bottom. Okay, double bottoms usually get shorts to squeeze. So here was one gap up that didn't get filled, another gap up that didn't get filled, and then another gap up that took it to prior resistance, and then on Thursday, you opened up, went lower, came into this gap somewhat. Let's draw this here. Let me get rid of this, sorry. Let me delete that. Hold on. I want to make this clean for you guys. Sorry. Okay, so basically, let me grab it. Oh, okay, anyway, who cares? Anyway, this pivot right here, it came in and, pushed a little bit below and closed well. So the question was, what would it do here? So what I had everyone write down was 193.79. Why 193.79? Because if it traded below 193.79, there perhaps would be some kind of air pocket. What does an air pocket mean? An air pocket means a void of no price action, of really no memory in between. So, how do you trade that? So today I came in flat after selling my longs, which I talked about on Twitter yesterday. And I was wondering, could we get a good trade into the gap, and how much will it fill? And can we digest this overbought reading? Because yesterday we were like the most overbought we've been in years. We hit like 80. And now we're at plus 44, which is still overbought. So anyway, you go back and this is where, we were. So you want to look at the 5 minute if you want to narrow it down, for day trading purposes. So you go to the 5 minute chart, okay, and it held. Here's your void. Okay, let me give you a little lesson here, even though you didn't come see me in Florida. Here is your gap, right? Big gap from yesterday. Basically did nothing for the entire day. Here a gap down. Tried to fill it and couldn't. So it left a little bit of this open. So this is actually the H sell setup also. You come down, you short into resistance. I know I was short a little bit, like 194s-ish. Comes into the pivot low, which was 193.79, which matched the one from yesterday. Comes through, you add here, and then you get your nice little trade. So you short 194, you short 193.79. It comes in when as low as 193.24, and that's how you make cash flow. Then it had a small bounce up. You could have shorted that for another move lower. Okay, and then it did a whole lot of nothing the rest of the day, but that was your intraday setup. Gap down, couldn't fill the gap, and then you had a gap from the prior session that you could have shorted for quick cash flow, or not so quick. It actually took a little bit long, a little bit of time. But during that time, oil was weak, JP Morgan was making lows, Apple was weak, Amazon was down $10, so there was a lot of things going on. They were like, oh, why aren't we going down yet? Let's just be a little patient. And then finally, by 45 minutes into the session or half an hour, the trade started to unfold. So let's go back to some other sectors and whatnot. So like I just mentioned before, to me, I think JP Morgan was a bit of a problem today for the market. Remember the Jamie Dimon bottom when he bought his stock, but kind of came out with a funny little saying, which was kind of, not that smart if you ask me, saying that he was bored, so he wanted to add excitement to his life, so he bought $25 million worth of stock. Well, anyway, here's where it failed. I remember leaving for Florida, and I said 59 would be some kind of resistance. I actually was short and didn't do well with it. And then now, this, upper range got pretty much resolved to the downside with a, big wide range bar. So we'll see what happens here if it tries to hold this. But this move in JP Morgan was a bit of a leading indicator of lower prices, in the banks and for the market, because it led the market off the lows and failed at resistance and had a potent down move. That was one thing. Then you look at Apple. I talked about 95.80. Apple's been very weak. Apple had a little bit of a move off the lows, okay, still below most moving averages. And then this inside range right here got taken out to the downside. So this 95, 90-ish, boom, closed on the lows. So now, this 92-ish area is really big. So this trend in Apple has been, really strong to the downside. There's your bigger picture look at it. Here was, your ascending channel that broke to the downside, bear flag, and really didn't do much of a rally during the process of this market bounce. So now this could be a problem if it breaks below 92, or not a problem, it could be a good short. Some guys probably went out short tonight. I was about to, but then I'm like, I don't feel like being short Apple just in case some kind of news with this whole FBI and this whatever thing. But ultimately, it's been technically weak and it's been below all the moving averages. Some of the other, Apple's not a high beta name, but I'll get into high beta now. FANG or Facebook, it's had a decent move off the lows. Okay, we've had lots of tradable spots. Some are still saying that this is some kind of ascending channel bear flag. So kind of made a little sense if you were long it during this move from 97 to here into resistance. Maybe you got out of it today. Some guys might have even got short. I think it's a little early because this hasn't broken yet, but at least maybe get out of the way. Google's been a little weaker than the other ones. Go to Google, and Google never took out this pivot here. You had a weekly pivot that some things that went above, like Facebook nudged above it. Just real quickly, Amazon, nudged above it and held above it. So Google has not been acting that well. Maybe there's too many longs trapped in it, but ultimately we'll see what happens. This is your resistance. Tomorrow will be interesting to see what happens here. If this were to start getting back below 713, that's trouble. Okay, here was your day. Remember when it didn't hold above 800, your sell signal after earnings? Boom. Here's a little bit of a retrace. Some would say this is an H sell setup. Here's your low, bounced up into resistance, short some here for it to come back lower. Not so sure, but still these are range vehicles now for for trading. They're not pent up, buy every dip, above the 8-day and 21-day looking for breakout trades. That changed in the first 2 weeks of the year. Another culprit today for the weakness was obviously oil, USO. Some of the guys came out and said they think it's ridiculous about cuts, et cetera, whatever. So anyway, this 21-day moving average that we rallied back up into, it kind of got rejected there. So I think tomorrow will be an interesting day for oil. Does it hold this and continue to the upside, or does it break below? Does the USO break below 835, and that'll probably bring some more weakness? Still very, very broken below all these moving averages. Little counter trend move that was tradable, but now it might have expired. So let's look at what the XLE looks like. XLE, you had your low right here, you had your higher low. It took back the 50-day and then closed real strong below it. So we'll see what happens here, whether it needs to go sideways in this channel before maybe higher, or if it starts breaking this. I would think that some commitment leaves. So all in all, in closing, you've had this big move where the oscillator got so overbought. You had these 5 gap ups in the course of a week and a half. First 2 were really powerful, couldn't get filled. First gap that finally got filled, showing a little bit of fatigue up here was on Thursday, into Friday when it filled that gap up from that Wednesday. So this was the first time in a while that a gap up like yesterday was filled just like that the day after. So little by little up here, it's a little bit harder for things to just go up in a straight line. Does that mean we crash? No. DeMark came out with this whole big saying that he thinks if we close below 1906, we're heading back to the lows. Ross also said that. I kind of think the same sort of thing, where if we're going to make a move above 1950, we probably need to hold 1905 and 1906 to keep some shorts trapped and keep some people thinking they're missing something long, because if we go much below 1900 and change, you know, they're not going to be able to fool anybody into the market moving forward, that we probably do start to weaken again and head back down to that 1800 area. So real quickly, just to show you that in the spiders, you go here, you know, you did have a failure pretty much right where, you know, it failed the last time. So in order for, last time it came to here, you know, you had this ascending channel and it broke to the downside all the way back to the lows. This time came here, you know, makes sense to pull back a little bit, but I would say if it, you know, it needs to hold above this spot, you know, in order to make a higher low to get some power to go up. If it starts to get below this, then it's, you know, who knows, this could turn into just one bigger channel. So we'll figure it out. For me, you know, I was long from Friday into Monday, got flat, came in today flat, traded, made some money short. I am a little short overnight, looking for some downside, and you know, we'll go over the strategy tomorrow morning based on the futures. Have a great night. See you tomorrow.